The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
If you're building or buying or selling a home, the Real Estate Crew's got news for you at the Real Estate House Party.
With attorney Rick Carter,
Real Estate House Party.
paralegal Kathy Holtshouser,
Real Estate House Party. Come in, have fun.
and comedian Tony V. Now, here's real estate attorney Rick Carter.
Welcome and thank you for joining us here on the Real Estate House Party. And we are told we cannot talk softball. So
Absolutely not. I'm out of here.
Can I give out
have
some-
shit to do.
can I give out some birthday shout outs?
Yeah.
I have some of my favorite people in the world.
Wait. My birthday's not this month.
I said some of them.
Okay.
Some of them.
Okay.
So, and I know when's your birthday?
July.
All right. So yours is coming up.
So we're already out.
So you're out. You're out. But still my favorite in the group. But I just happen to have a lot this weekend. So can I just rattle them off?
Go ahead.
Ryan Carter.
Yeah. Oh.
You know Ryan?
Yep, 31.
30. Yeah, you're very good. Yeah.
Wow. Happy birthday, Ryan.
Happy birthday.
Susan Sabatelli. She's
Yeah.
50.
Your sister.
No,
Yeah.
she's 50?
No,
Yeah,
60.
What?
Your sister?
We weren't supposed to say that.
Oh.
You guys didn't do too good at that one.
We're picking up the
Happy
social
birthday,
cues.
Sue.
How old does she look? Like 30?
50.
32 I gave her.
Yeah.
Let's see. My niece, Michelle Carter.
Who's going to be
Should I say her age? She doesn't
40
look 40
because it's
either.
amazing.
Yeah, I know. And her son, Tyler, who's going to be like 3.
Oh.
And then we have Sean Godding.
Oh.
Some sort of cousin-in-law. And
Some
that's
sort
it.
of cousin-in-law.
And that's it. So now we can get going. So the Iceman's here, John Marroni. We got a lot of discussion about workouts and things like that, as everyone probably knows about your background. You're in the mortgage world, so maybe you should tell us what's happening. Just a recap of what are we doing for rates? What are you thinking?
It's a wide range because, like a standard rate is probably
He
like.
sounds like Bruce Schwegler, doesn't he?
Yeah.
Could be a wide range.
It is.
It could either rain or snow, or it could be 80
Or
degrees.
do nothing.
So what are you thinking?
It's about 6.5, maybe a little higher. However, there's all these. Depending on how much someone makes, if they don't make in our area, if they're under 150,000, and they're first-time home buyers, all those price and adjustments go away. So they could actually get a rate of like 5.99 when everything.
Is that a fixed?
30-year fix?
Wow.
Yeah.
That's actually pretty good.
Yeah, the people that, believe it or not, if someone makes, I just had this, they're making like 200,000, perfect credit, the whole thing, they get nothing in terms of breaks
Right.
at all.
So when you say, and I think I know what you're talking about, but there's certain factors to an interest rate. Like if you're all of a sudden you're buying a condo, your credit score isn't quite where it should be.
Yeah, so condo,
Adjustable.
Yeah,
Does all these factor in on your interest rate?
Yeah.
absolutely.
Don't yell at me. I'm
like
giving
how
him a softball.
He doesn't need you to lob
Rick.
softballs at him.
Well, I figured we could talk softball if I threw
You
that.
didn't know I could throw my voice.
I'm leaving you two. I'm out of here.
All right, so those could factor in.
So the factors are the credit scores,
Yep.
how much you're putting down, the type of property, whether it's a condo, 2-family, single-family. So in a condo, if you put down 25%, then there's no adjustments.
Okay.
Negative adjustments.
Okay.
So, there's a caveat to that. So if you're able to qualify for one of the lower income programs, those adjustments go away as
Okay.
well. So
All right.
it's it's not even so much low income because it's still good-
$150,000
Right.
is not low
No,
income.
Right. They're now calling it low to mod, and even that still.
Isn't that unbelievable?
150,000 is low
Oh my
income.
God! I need a raise.
See, 150,000.
Why don't we just give it a different term?
Now I'm
if you're
poor.
150, you make a lot of income. How's that? Does that make you feel better?
Well, put it this way, right? The average person that's renting in town, they're paying like $4,000,
I know.
$4,500.
Yeah.
So,
I know.
And so the good news for them is when they go to buy something, there's no payment shock in terms of
that's true.
housing.
Right.
Well, they're excited. They get in there. My mortgage
Yeah.
payment's
But
actually less.
how are they saving though?
Very little.
Right.
Yeah. So what they'll do is they'll put 5% down if they have perfect credit, and if their income's around the 150,000, they're going to get a decent rate. You know?
Yeah.
Right.
How would you suggest someone can improve their credit? I know we weren't supposed to talk about this, but
I can talk about it.
Okay.
So it depends. Like in terms of credit score, typically I see people are maxed out on their credit cards.
Yeah.
And I'll run it through a simulator, and I'll see if they pay down their credit cards to a certain amount, the score will improve dramatically. And
Well, what ideally you should do with a credit card is use it and pay it.
yes,
Use it.
That's right.
Pay it. Use it. Pay it. And that actually changes your credit score dramatically.
it does.
Isn't there a service out there you can get like one of those cheap credit cards and?
Yeah, so there's a website you can go to, creditcards.com, and you go on it, and it'll ask you what your credit is. If you have no credit, if you just had foreclosure, you can get any type of credit card. So you might have one that's, all right, it's a secured credit card, and maybe the interest rate is 1,000,000,000%. Well, if you're going to pay it off every month, who cares?
That's what I mean. Yeah, who cares?
Yeah, so don't get caught up on the interest rate. The idea is reestablishing yourself.
Because you shouldn't get a credit card on the premise that it's extra money to you.
That's right.
Because it really isn't.
No.
It's actually going to hurt you in the long run. Because what's the percentage you have to have under, say
50% maybe?
No.
Well, under like 25%. But the idea of a credit card, I went to Killington. If I didn't have a credit card, I couldn't go skiing.
Right.
Oh, yeah.
But
You
you
can't
know,
They wouldn't take cash.
You can't go to the Boston Garden anymore without a
I know,
credit
and
card.
also Xfinity Center in Mansfield, no cash, no cash.
Right,
Yeah.
right.
Yeah.
And then they say, do you want a tip? And they give you a little,
A tip for handing me a beer?
Yeah. A little.
Do you know how many tips you'd have to give out a night?
But the point of having a credit card is that it's convenient and it's more secure than using your debit card.
That's right.
Because you're not putting your savings and checking account out there for anyone to hack into. But the other thing is, you can afford to pay it off when you leave Killington
Right.
next week.
That's right.
You have the ability to pay it off. So people get wrapped up in getting a credit card and they think they won $1 million. And remember that girl we work with that was so excited she got a Tajay credit card, Target?
Oh, yeah.
And she thought she died and went to heaven. And I'm thinking, well, if you had cash, you could just go buy the same stuff, right? But it was almost like a windfall for some people.
Oh, yeah. Well, that'd be like, I remember, I'd go out, this is back when I was like my other company, New Boston, and people would say, come on, let's go out. Don't worry, you can write it off. I go, well, it's not free. They keep saying, you can write it off. Buy this, write it off. I'm like, they make it sound like
Like the IRS just gives it as a blank check. Don't worry about it. It's for business.
Like it's a tax refund. It's like.
But honestly, cash is king, right?
It is.
Cash is king.
Except when you go out to those certain places.
No, but so what the thing is, you use your credit card and then you go home and you pay it off.
Right. How long does it take to establish credit if you get one of these credit cards?
So if you have no credit,
because
I've had people with no credit scores, no credit. I'd say about 6 months, of payment.
6 consecutive payments.
Now here's on bankruptcy, right? So when someone, let's say they go Chapter 7 bankruptcy, a lot of people make a mistake. It gets discharged. When the discharge happens, the next day the average credit score jumps up 90% because you have zero delinquency. So some people are they went through it, the pain, the credit cards, that they don't even want to open up any more credit cards because they figure that's what got them in trouble. But they need to.
Then they seem to come around anyway.
Yeah. But that's when you need, even if it's a $300 limit, you need open up a couple of them after bankruptcy and then the key is reestablished.
I'm laughing about a couple times would have like a rate term refi or like a debt consolidation, and it was the biggest pain in the neck to pay off 25 credit cards. This balance wasn't right, or you mailed it in and it got sent back, or whatever. So we have post-traumatic stress from that, but we'd see the same borrowers come back a year later,
a year or two,
when the rates went down,
Yeah.
with the same 20.
And the only difference is they have an extra kid, We had that one girl from, I won't
Oh,
say the town.
I know exactly who you're talking about, and she was one of your clients.
Oh, all of a sudden she's one of mine.
No,
Oh,
one of John's.
Oh, that's right. We won't mention it.
I'll find out.
$16. I have $16 in my checking account. Then you can't buy a house.
Yeah.
All right, so
You know
is this...
what? Wait, I gotta-
Yeah, go ahead.
I'm going to throw caution to the wind here.
Go ahead.
Lately, the last few years, people are going paperless on their credit cards, so they're not getting the bill.
Yeah.
Okay. And I've seen this come up where someone's not using their credit card, but they forgot that it's an annual fee.
That's a good point.
And I see the annual fee hits. They don't know about it. They're not getting a notice. They're not even
No,
getting an
that's a
email.
good point. Yeah.
And then I pull a credit and I see 90 days late. They're like, "What are you talking about? I don't
Right.
have."
Oh, that's a good point. How do you get around that?
So
You clearly,
You get a mobile app.
clearly they're not delinquent, though. So if they
Right.
did do that,
the credit card company they worked with them on that one.
okay. I mean,
You know,
clearly it's $12 or
Right.
something like that.
I know, and it killed the.
Here's a story I heard where this poor girl was starting to get foreclosure notices 4 months after she bought. She thought,
Oh, boy.
I know. So she thought she had correctly set up her auto debit.
Yep.
And she gave him the wrong account number and didn't notice that there was no money being taken out of her.
How does she not notice?
Don't yell at me. I'm just telling you the
How do
story.
you not notice when you don't see your mortgage payment? Oh, another free month.
No, she should have probably saw that she had $12,000 in her
Extra in her
checking
account. Right,
account,
of
but she
course.
didn't. So she was starting to get foreclosure notices.
Yeah, she probably thought, "Oh, I'm budgeting quite well lately."
I love this new ownership.
But
I
honestly-
should buy more houses.
Honestly, the mortgage company or the lender should have been contacting her at some point, right?
I'm
would
sure
think.
they were, yeah.
Oh, and she just didn't. She didn't notice the mail.
Keep looking at me like it was really me doing it, and
I know. I
pretending it was someone
find
else.
it hard to believe that you just thought you were paying your mortgage payment.
You know what? She probably got notice, I bet. And then she said,
oh no, I'm paying it online.
Yes, it's coming out automatically.
I know, but if you get
But I get
the
stuff all the
fourth one,
time.
I know you
they
do.
want me to sign up for a new credit card. St. Mary's sends me stuff. Eastern Bank sends me stuff.
and then you collect
Bank
it,
of America
and then you
sends me
drop it at my desk.
Oh boy, there's a lot of bitterness today.
I
Do you want
know.
to talk softball or not?
No, oh my God.
All right, here's a girl that also you're gonna love this one if you didn't like that story. This girl had credit problems because she thought someone sent her a free Kohl's card.
Oh,
It wasn't, a gift card.
a gift card.
And so she went down to the store, bought $50 worth of stuff. It was a credit card. And she didn't know that.
I know, but
All
where
right.
did she get it though? Someone sent her.
Someone sent it to her. And yes, maybe it was Kohl's. Said, here's your free, credit card. Try it out. I know. So she also had
I
credit
have
problems.
this piece of land in Florida.
We should talk about scams today. I know. Susan Sabatelli would love to have us talk
you
about
got
some
to pay
scams.
attention. It happened. I just noticed on my account, I was looking at my Discover card and I saw a GoDaddy charge.
Yeah.
And I go, I haven't had GoDaddy for the longest time. What's going on here? And then I'm looking at emails and it says, they're having trouble charging my Discover card. It was an old one. And then I saw another email saying, Discover took the liberty to put it on the new Discover card.
Oh, wasn't that nice of them?
Yeah, so I called GoDaddy, and they're just like, I finally explained it to her, and she's like, you don't have, I think it was Boston Loan Tips domain. I go, I haven't had that for X amount of years, and she's like, yeah, we've been sending you emails to, John Marroni Verizon.net. I go, I haven't had that email since I left my old house.
Yeah.
No.
In 2000.
Yeah, and I'm like, so she's like, and then she finally get on the phone, right? And she's like, oh, good news, we're able to reverse it. I go, so good news, you're able to do what you're supposed to do.
Right. You know what else? That's like
Yeah, but they can't do that.
I know.
there's no authorization
Oh, and here's
to do
the
that.
thing. The email said, we're having trouble. We can't renew it. Your renewal will be canceled
Okay.
unless you take this action. So I didn't take the action, assumed it was
You thought it was
canceled.
canceled.
Yeah.
You know how many?
And they can't do
You know
like
how
that.
many?
did it. They
You know how
did
many
it.
of those accounts we must have out there? Like they always give, like the Boston Globe will give that, for $1.
Yeah.
You get this for 6 months. After that,
Yep, it shoots up.
and
Yeah.
they start taking it out of your account. Or the lighter side of real
Yeah.
estate, something like that.
Yeah.
I mean, we must have like 20 of those where they automatically.
We or you?
Well, you're in charge of it there, so
I ask you.
I know. Yeah.
No, I know, but you got to keep track of all that stuff.
Yeah.
Your Netflix and your Peacock
Yeah,
and your
that's right.
I
Paramount.
have a bookkeeper that does all that for me.
A real estate paralegal.
Yeah. She's yelling the other day. She wasn't a. What'd you say? I'm not an accountant.
I'm not an accountant, Rick, nor a magician.
Don't you think she should have told me this 30 years ago before she was doing my books forever? John?
Was that one of the questions you asked her?
No, you know what the question that they asked me way back when? If I knew what a municipal lien certificate
no,
was.
it wasn't they. Let's identify.
And then the next question to the
Do you have a
interview
car?
is, do you have a car? And I'm like, you moron, how do you think I got here?
That was the interview. I didn't do the interview, but
You
someone else.
moron.
Wow.
That's
all right.
harsh.
Let me ask you this:
That's harsh.
Is this still true? Where if you have a credit card maxed out at $5,000, you might want to get a second credit card and split it up, $2,500.
You could do that, or you could also call the credit card company and ask for a credit
Increase. Okay.
Yep.
Because you don't want to look like it's maxed out.
Well,
right?
Right.
a maxed out credit card, isn't that going to decrease your credit score?
Sure will.
Yeah. That's
yeah.
what.
Yeah. So a quick way, if all of a
Is
sudden
that
they
what
give
I
you
just said?
a different way, but yeah.
Don't even look at me. Don't even look at me today.
Oh, this reminded me.
When we edit this show,
I remember a long time ago. I think it was around 2008. This person I did a mortgage for.
Are you okay?
yep. Go ahead.
He paid $200,000 for the house. It was in
Oh my God.
Lynn, and we did maximum financing.
Yeah.
And then, I tried staying in touch with him over the years. And fast forward like 7 years, now it becomes like 2008 or 2007. He goes, John, I'm in trouble. I go, why? What's up? He goes, I think I'm going to get foreclosed on my house. I said, well, you paid $200 for the house. I go, how much do you owe? He goes, $400. What? I go, what? He goes, well, yeah, they kept calling me up and they kept giving me money, whatever. I said, okay.
Oh yeah.
How old are your children? Oh, they're all moved out of the house. Are you tied to the neighborhood, the community? I said, no. I go, no, what are you worried about? I go, you haven't made a mortgage payment in 7 years. In fact, these companies, you went to Jamaica for free. And
Right.
You haven't made a payment. You've lived for free.
Excuse me. I love the attitude, too. These banks are taking advantage of me. They're foreclosing on me. We had someone like that.
Yeah, did they give you the money? Did they
Right.
give you the money? And
Remember
you signed
agreeing
a
to
promise?
say you're going to give the money back?
Right.
We had that one girl found out there was a title problem on that condo up in New Hampshire. Couldn't sell the house because they put the mortgage on the wrong half of the house.
Okay.
And then what she did was, can't sell it. I'll just jump on the other side and see if the bank will ever come at me. She must have been in there for, remember that one? She was in there for about 10 years.
Yeah,
I'm not exaggerating.
And I told, he asked me, what's the advice? I said, well, you just called me. You told me you're in trouble. I go, it sounds like the bank's in trouble.
Yeah.
Right.
I thought you might want to call them. And
You had one good tip for me once, so where someone called you up. You got caught on this once, and I'll never. Since you told me this, never get caught on this. Someone said, "Should you do this? Should you buy this place?" I think you told them either not to do it, and then it went up 100,000.
I didn't say anything.
Yeah.
I just said to myself,
Yep.
he's crazy. And then, thank God, I said nothing.
Excuse me.
Because when he sold it, he ended up making an extra couple $100,000.
Right,
and
right.
And lesson
so you
there
never-
was
yeah.
is when it comes to like predicting the market and all that.
Right.
I have not my place
Right. Nor you don't, but you don't have a crystal ball
at all.
And so
That's
yeah,
right.
yeah.
Because for 8 years I've been saying we're at the height. We're at the height. Now it's just like, all right, it's you're looking at the demand factor that's still strong around here. People
Right.
still feel pretty good
All
about
right.
their jobs.
I'm going to ask you for some advice that's probably never been given before. This is going to be a first.
Always asked, never given.
How someone can show income but not working.
So there's
Say-
many ways.
Okay. I like this part of the show.
Another lob.
Oh, you wouldn't know that answer.
I do know the
All right,
answer.
go ahead. Go ahead.
Foul tip. All right.
All right, go
So
ahead.
alimony,
Yep.
child support,
Yep.
rental income, royalties, trust income.
So the trust income. So say the grandfather has a trust that's worth about $500,000.
Yep.
And gives the kid, because I think they can give X amount of dollars a year as a gift.
Right.
So how would you work that?
So we could do it a couple ways. If it's, let's say, the income is maybe $2,500 a month, let's say, and we're thinking that might not be enough. We need to boost that up somehow. So the trustee could, let's assume there's enough
And
money.
these aren't originator terms. We got to boost this up somehow.
Yeah.
Coaching.
That's just John Marroni's wording.
Wait. When we say this, it's not really coaching. It's just, go ahead. I'm
No,
sorry.
we got to figure out a way to get the income to this level.
Right.
So how we boost the income is how we give them a pay raise is this. Let's say we need $9,000 a month to qualify, and we can demonstrate that $9,000 there'll still be funds available after 36 months. All those other incomes I mentioned, as long as you demonstrate you're going to receive it for 36 months, we can use it for income. So you just
Wait a minute. I'm sorry.
Yeah.
You have to prove that you're going to get rental income for 36 months?
That's different.
Okay.
Because that's more likelihood based on the leases.
Right.
Yeah.
Right. And but what if your
Like
kid's 17 and you're not going to get child support
Yeah, I
after
can't use
18?
it. Cannot use it.
All right. So good point.
Yeah, absolutely. Glad you brought
And
that up.
then the alimony, it could be a 10-year alimony, so
Right.
you'd have to have 3 years left in the
All right,
alimony payments.
all right, let's talk about the alimony because it's in line with what we're just talking about here about boosting the income. So let's say the husband's leaving, he wants to give alimony, but he just wants to give a lump sum.
Does a husband ever want to give alimony?
Not on a
You
monthly
pick-
basis.
You picked the wrong words.
Okay.
Johnny has a way to structure it, so it sounds like it's a lot more pleasant.
He's required to give alimony.
He's accepted the fact that he's given alimony.
Yeah.
Right.
He didn't want to, let's say he just wants to move on and not do it on a monthly basis and says, all right,
Lump
let's
sum.
One lump
lump
sum.
sum, $500,000. So the wife's not working. Well, you have this $500,000. So traditionally, we could do this asset dissipation. So we would take, let's say the term of the loan's 360 months. We divide it by $500,000. That probably gives you about $1,400 a month. If she wants to get a mortgage, well, that's probably not enough. Another way around it is take the $500,000, create a revocable trust, and state that the trustee state we're going to give you $9,000 a month, and we just need to show just one distribution of $9,000, and I get to use $9,000 for qualifying income.
Really?
Yep, absolutely.
But the thing is, it's the exact same situation, except one's in a trust and one is in a bank account.
Correct. So the bank account one, again, we just do the asset. We'd have to
Right.
divide it, but because
And it wouldn't work.
because
Even
it's
if
in
you
the
had
trust.
$500,000 in the bank and you don't have a job, you can't qualify for a mortgage, a big mortgage.
Correct.
Okay.
Correct. So, but you put it in a trust. I think a trust is like $1,000 or something to create.
Yeah, probably.
Yeah, it's worth it.
Right.
And
All right, let me ask you this one.
Yeah.
Because rates are sky high. All of a sudden, one of the spouses has to buy out the other one.
yeah,
But they have their rates in the 2s or 3s.
Right.
And now they have to get a loan in the 6s and 7s. And I know you've been doing a lot of divorce loans. Do they factor that in, or how does that factor in?
So what happens is a lot of them are letting that stop them from moving forward.
Right.
Right.
So, and I said, all right, let's just back up. You get this rate, 2.5%.
Yep.
Let's say the wife wants to stay in the house. I say, all right, how long you want to stay in the house for? She says 5 years. I said, okay. Let's say the difference. Let's say the husband's going to get $200,000. And let's say the difference of the higher interest rate is an additional, above and beyond the higher loan amount. Let's say it's an additional $500 a month. That's, $6,000 a year over 5 years. There's $30,000.
Right.
So, I look at the husband saying, you're going to get $200,000. Now, you do realize all this equity is available to you because the interest rates were so low the last few years.
Right.
Yep, which is
So,
true.
and if it's going to cost an extra $30,000 in payments, I go, maybe just take $170 and call it a day.
Right.
Or you could wait for the rates to drop and you wait for the value of the house to drop.
Right.
And then you might get 1 1/4.
Yeah.
Right.
So, John, I think you may have missed your calling. You might want to be a mediator.
Yeah, I was
a
thinking
divorce
that.
mediator.
It's funny you say that because
No, I'm serious.
because was doing a presentation to
He's teaching them now.
Yeah, I had 15 divorce lawyers in town. I talked about that exact scenario, and they said,
And they were all like, huh.
no, they said, can you talk to our clients?
Yes. I think it's just a matter. You could just take a 40-hour course
Yeah, I know.
or something.
I can if I.
And they make some big money.
Yeah.
You know, for like 2-hour mediation, you might get $500.
Where do most of those attorneys have their obstacles with?
Their clients?
Yeah, definitely that.
Well, lately it's this the higher interest rate.
Yes.
You know, but because I say this, you know, let's say the husband. Let's say I want to leave at all costs. You know, the idea that I'm tied to, you know, my future ex. It's just I can't even think straight or whatever until this is behind me. Well, that's going to affect my income. You know, let's say I'm in sales. You know, it's going to affect my production.
Yeah.
If I'm in the workforce, you know, I'll probably get fired because I'm not doing
Mental
anything.
capacity.
Yeah.
You know, it's like that's got to count for something. you
Right.
know?
So just take a little bit less and let's all move on.
Yeah, and you'll be much better for it.
Yeah.
Period. Plus,
Yeah.
burn the hand.
Yeah.
You know, because you know, the guy will say, "Well, you know, $30,000, that's a lot of money," and I'll say, "So is it 170?" You know.
Yeah, you got it. You have it down pat.
Yeah, it's just
That's great.
Well, you know, and it's, you know, that's how I, you know, talk to my clients. You know, and you know, people say, you know, customer. I said, no, I have a client. They say, well, what's the difference between a customer and a client? And I said, a customer is always right.
Yeah.
And a client is.
A client is I
You're
save,
paying me.
and to save you from yourself.
Right. Which you have a great line when someone comes to you and you can't qualify them, and you're like, the answer isn't no.
No, it's
not
just
yet.
not yet.
Yeah, not
Right,
yet.
and no,
Not now.
Right, and no is just an acronym for not over.
Now, I know you've thrown this out before, but I think this is a key one there with all of us, especially in the divorce situation where they both have co-signed their kids' loans.
Oh, yeah.
How do we get it so neither spouse is obligated, or not obligated, that's showing up on their credit scores?
So, that's a good point. So, let's say they co-sign for a student loan or an auto loan for their children. Now, when I mean by co-sign, I mean the child's on the loan too.
Right.
Like some people will think they co-sign. Oh, I bought this car for my kids. So
Yeah, but a lot of parents took out the parent loan, not without the kids on it.
Well,
without
that's
the
what he's
kids on it?
saying.
Yeah.
Yeah,
Well,
no,
that's
no.
a problem, right?
That is a problem.
Yeah.
So, well, when it comes down to repayment.
No, that's a good point. So, all right, no, go. You finished.
Yeah,
the one.
and then we'll go back to that.
Yeah,
so
yeah.
as long as the note, the child's on the note,
Yep.
along with the parent,
Yeah.
when the payments are due, have the payments come out of
yeah.
the child's account. Make sure the parent's not
How
on
many-
that
how
account.
many months do you have to do
12
that?
months.
Okay.
And after 12 months, I don't have to
Okay.
debt them for that student loan.
So back to Kathy's point, if they didn't co-sign the note,
And it's in the actual parent's name.
is there anything you can do about that?
No.
Okay.
No.
Okay.
Yeah.
No, I had a situation where the people wanted to buy a house, and the wife was on the house with her brother out
Yeah.
in California.
Yeah.
And then they went to refinance, and the credit score of the brother, it was good, but not perfect. So the broker said, oh, it's okay, you stay on title, and we'll just put the wife on the note and not
Who
the brother.
said that?
It was
The real estate broker?
no, the
loan
loan
officer.
officer to refinance. And so they're both signing all their documents, and he didn't realize that the brother's not on the note, just the mortgage. And so so she went to go buy a house with her husband, and I said, I got to debt you for this mortgage unless someone else. And I knew there wasn't because I looked in the credit report. It just said bar. It didn't say joint. She's like, oh, I'm on that with my brother. I go, I don't think you are.
No, you aren't.
And it became a problem. Then I said, she's like, well, how do we resolve this? I go, well, you're going to have to like refinance. And then the brother's like, all right, I'll refinance. And then like when they got the CD, he goes, I'm not signing this, you know, because the payments were going up like $1,200 a month.
Yeah,
And
yeah.
it prevented her from buying a house.
So a little coaching in the beginning, or counseling in the beginning.
Well,
Yeah.
right, and a lot of people. We should wrap it up, but a lot of people don't understand. Like, so if there are two people on the title,
Yeah.
on the deed, me and Rick own this piece of property. Rick can't get qualified because he has bad credit. I have stellar credit.
Yeah.
So.
Why'd she go with that one? It could have been the other way around.
All right, you have stellar credit. I have wicked bad credit.
Thank you.
Oh, I thought you said something else.
Thank you.
So, and all the loan officers say, "Oh, we can get around that.
Yeah.
We're going to leave him off the loan,
Like it's nothing, yeah.
or leave me off the loan." But honestly, like they don't understand that they're signing it, promise to pay back.
Yeah.
Just I am or just Rick is. So I don't. The other person doesn't have any real.
They're just probably responsible for the taxes at that point.
Well, but then if the house gets foreclosed on, of
Yeah.
course, then they lose.
Yeah.
But technically, I don't have any skin in the game except that I own the property with a mortgage that's not being paid.
Yeah, on the flip side, it just reminded me of someone that was going for a first-time home buyer program. Like, they didn't own anything or whatever, right? We ended up doing a property search. They were like 1/7 owner. They had a house inherited. I go, you're not a first-time home buyer.
Yep.
Actually,
I was going to ask you about that.
The mass housing wouldn't do it. They wouldn't do it.
That's a technicality, and it's not their first home.
How do you find that out?
Home ownership.
Let's.
I don't know. They're doing all these.
Don't
searches.
they have a? Don't they? It's not just a search in like Massachusetts. You have a countrywide search.
Seems like a worldwide search.
Yeah, worldwide search. So, which was going to get me to one scheme we're going to talk about. But looks like we're running out of time. We might
How long can you do it in?
2 seconds, and maybe we'll talk about it more next time there. But John Sabatelli, Susan Sabatelli, we're bringing up this. There's companies out there that check to see if your house has gotten sold. They'll alert you to that. So if you don't want to sign up to that, there's a way in Massachusetts which is very easy. I shouldn't say it's easy; it'd be a lot of work. But you can at least see if your house is ever sold without checking with any of these companies. You go on Mass Land Records.
Oh, yeah.
Right?
I think Newt Gingrich was doing a title search, titlelock.com or something. He was promoting his commercial.
Oh, Newt Gingrich?
Yeah.
Really?
Yeah, just saying how just exactly what you said.
Oh.
And then they have the guy saying, "Oh, you think I can own your house in 2 seconds? Just watch me," without you even knowing.
It actually is easier than you think. Yeah, you just get some scam artist who's a notary and signing away a deed.
It's like that story when the guy the tenant.
Oh yeah.
The guy cold calls him and says, "Would you like to sell the house?
Yes, I would.
Yes, I will. I do. I do want to sell it.
Come on down. I'll sign the document right now.
Yeah.
But your thing, will they get alerts?
Not with Mass Land Records.
You just have to
You
periodically.
have to manually do it all the time.
Okay.
But just go on Mass.
But honestly, if someone sells your house, that is worse than a felony. It's a jailable offense.
Well, there was
do
a
it to
guy
cash
in
out.
Cambridge who did it to an elderly.
Well, this is what they do. Is if they refinance, they do cash out. Is what they're doing, and then
but there has to be some recourse
and how they
in
find
that.
out is the house is being foreclosed on.
Right.
Well, a lot of them are looking for people who don't have mortgages, so they're not getting a mortgage payment. Because if you sold your house, in theory, you're not getting those mortgage payments.
Right.
But maybe we'll talk about this more when Tony
that's
V
terrible.
comes back. Because
Would owner's coverage cover that?
It's going to be tricky. I don't think it covered it in this situation.
Okay.
With this.
Well, that would be it's worse than like a forgery or. Well, I guess it would. We'd have to ask our title insurance company.
That's a tricky one.
But like all these scams are starting.
Yeah, I know.
So they're gonna have to change their.
I mean, it's an industry now. These scams.
Oh yeah.
They're good at it.
Yeah.
Oh, the wire fraud. Oh, we could talk about this, which is what we're supposed to do until we got a lot
Sidetrack
more.
has a softball.
Lot more of coaching going on.
So what do you want to talk about today?
So I think we got to wrap it up.
As usual, John, you are very, very knowledgeable.
Very informative.
And,
Very
thank
informative.
you.
Thank you for coming in.
Thanks for having me.
Thanks for joining us here on the Real Estate House Party.
You got it.
Kathy Holtshouser, paralegal extraordinaire, and the Iceman, John Marroni. A lot of information for us. We appreciate it.
Just keeps coming.
Keeps coming. We'll see you next week.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.